So we'll move now to our third session of the day to consider where we are on the journey to good culture in financial services, something that we've been focused on in the central bank for some time, and again, a theme that we have heard touched upon in the discussions earlier today. So to kickstart this conversation, I would like to welcome Verena Ross, Chair of the European Securities and Markets Authority, to the podium. Verena took up the role as Chair of ESMA 1 year ago, almost to the day, I believe. For the previous decade, Verena served as ESMA's first Executive Director, and prior to this, Verena held a number of senior posts in the UK Financial Services Authority. You're very welcome to the stage, Verena.
Thank you very much, and thank you very much to the Central Bank of Ireland for inviting me here today. It's a great pleasure to be here and be here in person, even if the weather outside is kind of a bit windy and a bit rainy, and certainly reflects a bit the general environment, I think, in which we currently are living. So let me take this opportunity. I'm really looking forward to the debate in the panel in a second, but given the opportunity to talk of my own views for a second about what does good culture in financial services actually mean. When your invitation reached me, I was immediately intrigued and said, no, I definitely wanted to accept this invitation, because exchanging views on this interesting topic was something that I was looking forward to. Then when I started preparing for what I wanted to say, I had to pause and realize that, maybe that was the same for my fellow panelists, that actually I might have let myself in for a challenge here. Because culture is famously difficult to define. It includes values, it includes beliefs, ethics, attitudes, none of which are easy to encode in legislation or to enforce. Culture, good or bad, happens mainly in the space between legislation and practice. On top of that, our understanding of good culture in the broadest sense is different depending on the circumstances. Our background, our nationality, our age, our gender, our education and professional backgrounds, to name but a few factors, all of them can influence how we understand good or indeed bad culture. Specifically, when it comes to financial services, our understanding of good culture might also be colored by the position that we have in the investment chain. Are we an issuer? Are we an investor? Are we a broker? Are we a fund manager? Where are we in this continuum of the investment chain? And, excuse me, and it might differ by the outcomes that we want to achieve. So as a regulator, I see the difficulties around describing good culture. But as a supervisor, I also believe it's so core to what we actually do on the ground, because it's only with good culture that we can make sure that outcomes for investors are ensured and that we maintain orderly and stable financial markets. Let me start with an obvious remark, and François, the governor of the Banque de France, already referred to it. Weaknesses in corporate governance and an often poor corporate culture have certainly been also acknowledged as one of the underlying causes of the financial crisis, with a number of credit institutions and investment firms contributing to excessive and imprudent risk-taking in the financial sector. As a result, trust in financial services as a whole was clearly undermined. At the European level, ESMA, as well as the other European supervisory authorities, and the national competent authorities, such as the Central Bank of Ireland here, work on promoting good culture in the entities that we supervise on a day-to-day basis. And we try to do that in two broad ways. Firstly, by setting standards of behavior we expect to see of these organizations, especially the behavior of their key leaders and decision makers. Secondly, through empowering the investors, the users of financial services, to understand the products being offered to them, and therefore to demand better advice and services. Through that demand, as informed consumers, they can drive themselves improvements in culture. As supervisors, we are also aiming at a common European supervisory culture. This does not mean full harmonization of all supervisory activities, but rather using the approach best suited to achieving the common supervisory outcomes and objectives of investor protection. This requires a similar understanding of what good culture means. In that respect, I thank the Central Bank of Ireland, who is taking quite a leadership role in bringing that topic back to our table at ESMA and discussing it again and again. On a more internal note, and within ESMA, with our own staff, we also try to walk the talk. We put a lot of emphasis on professional integrity and have a strong focus on ethics and preventing conflict of interest. When I started speaking, I insisted on the difficulty of legislating for good culture, but I would nevertheless like to spend a few moments outlining the various initiatives that are taken at European level to support good culture. Starting at the beginning of the investment chain on the issuer side, last year the European Commission proposed a corporate sustainability reporting directive to revise and strengthen the provisions introduced by the existing non-financial reporting directive. This directive obliges companies to report according to European sustainability reporting standards. And EFRAG is being tasked with producing the technical advice to the European Commission on what these future standards should look like and what the topics are that should be included. And there you will find a number of them that speak directly to culture. Business conduct culture, avoiding behaviors that benefit a few powerful people with detrimental impact on society, such as corruption and bribery, transparency about anti-competitive behavior and political engagement or lobbying, and the role of administrative management in supervisory bodies and their composition, including diversity policy. Moving along the investment chain onto the financial market participants side, the role and responsibilities of management bodies in both their supervisory and management functions has been strengthened in order to ensure sound and prudent management of credit institutions and investment firms, in order to protect the integrity of the market and the interest of consumers. Now I lost my page. There we go. ESMA and the European Banking Authority have developed joint guidelines which provide common criteria to assess the individual and collective knowledge, skills, and experience, as well as the good repute, honesty, and integrity and independence of mind of the members of the management body and key function holders. The guidelines also insist on the importance of diversity in management bodies in order to overcome the risk of groupthink. Going forward, the European supervisory authorities are setting up a very practical tool to support these guidelines, a cross-sectoral system for the exchange of information on the so-called fit and proper assessment. The system will provide altogether 55 competent authorities across the EU with context lists and searchable shared databases of holders of qualified holdings, directors, and key function holders, which are being assessed for fitness and propriety. Thank you. Apologies. So we have that system to exchange our information on what is fit and proper, and hopefully that will allow us collectively as supervisors also to get a shared understanding of what it means and how we can make sure that the bad apple is not just moving from one part of the system to the other. ESMA is also cooperating with the EBA in the development of the guidelines on internal governance for investment firms. The guidelines provided recommendations for the development of an internal culture which is robust and inclusive. The guidelines state that a management body should develop, adopt, adhere to, and promote high ethical and professional standards. The investments firms should ensure that there is no discrimination towards staff and that their policies should be gender neutral and should monitor the trend of the gender pay gap. This emphasis on the members of the management body and key function holders is crucial to the development of good culture. The behavior and attitudes of top management filter through the whole of the organization and should also be reflected in their decisions. In particular, more diverse management bodies can more effectively monitor management and therefore contribute to improved risk oversight and the resilience of the firm. Let me come back briefly to my second pillar of our work to promote good culture in supervised firms. And that starts from the investor perspective. Educated investors make better informed investment decisions and are able to assess critically the behavior of financial intermediaries, thus demanding and driving the development of better culture. Financial education is an important starting point. It can encourage people to save and invest long term, as people who are financially literate are more likely to understand and ask the right questions and take advantage of the possibilities provided by capital markets. An informed consumer will also demand higher standards of the organizations that they are investing through or investing in. We are seeing this happening in practice as investors are, for example, funneling more and more of their money into ethical investments. I therefore see it as critical that financial education initiatives are offered. They should target both the young, but also the adults who are engaging in their workplace or in their buying of financial products at the point of sale. Overall, I would say that we collectively have made some significant effort and certainly made some progress since the financial crisis when it comes to the culture in financial services. However, I would like to introduce 3 notes of caution here. The first one is that we are moving into an era of higher inflation where investors will likely be seeking greater yields from their investments. In this scenario, the financial services industry and its regulators need to lean on firms to really live good culture in order to ensure that investors are protected. ESMA recently issued a statement reminding firms of their obligations in this regard, given the challenging economic environment that we have today. I mentioned the rise of interest in investing in social or ESG products at the beginning of my address, and the increasing drive for corporate disclosure in that way. My second note of caution is therefore around the need to continue working on aligning the understanding of good culture and good practices along the investment chain. The combination of growing demand for ESG investments and the rapidly evolving market that tries to meet that demand creates room for greenwashing. Addressing this greenwashing risk will be key to safeguarding investors and their trust in this nascent market. Thirdly, while my focus in this speech has been mostly on the traditional financial markets, we also need to acknowledge that when financial services are digitalized or gamified and new technologies are promoted, good culture and a focus on investor protection is ever more critical. While digital trends and new business models can help retail investors to engage in financial markets and provide opportunities both for savers and companies seeking financing, these developments do not come without risk. Gamification techniques in trading apps, personal recommendations in social media by influencers and so on, may cause retail investors to engage in trading behavior without understanding fully the risks that they are taking. ESMA is monitoring these trends and has also issued some warnings recently related to crypto assets in particular. So, while I began my address to you this afternoon by saying that good culture is difficult to define, before spending the best part of my remarks to actually explain what we are trying to help defining that good culture, I still want to leave you with a final thought before I join my fellow panelists, and that is that culture is also not a constant. It's something that keeps on morphing and changing with time. As a regulator, I see how important it is in our changing times that all actors in financial services, from the issuers to the investors to the regulators, feel their responsibility around maintaining strong ethical standards. As a supervisor, that means that we need to be on our toes constantly. We need to hold supervised firms to account in living up to their good culture ambitions and come down hard on those that are undermining investors' trust. We also need to continue the efforts on investor education to increasingly empower investors themselves to be able to take responsibility. Thank you for all your attention, and I look forward to the discussion with my fellow panelists.
Many thanks to Verena for whetting our appetite for the next panel discussion of the day. I think plenty for this panel to unpack on this topic. I would now like to invite Colm Kincaid, Central Bank Director of Consumer Protection and Chair of this session, to the stage, along with our panellists, Moyagh Murdock, CEO of Insurance Ireland, Verena Ross, who we've just heard from, Chair of ESMA, Dr. Agustín Reyna, Director of Economic and Legal Affairs at the European Consumer Organisation, MaryRose McGovern, Acting Financial Services and Pensions Ombudsman, Justice John Hedigan, Chair of the Irish Banking and Culture Board, and John O'Connell from the Financial Services Union. Welcome, everyone.
So, good afternoon, everybody. Delighted to see you all here for this, our third session, as Gina has said, on working towards good culture in financial services. I am absolutely delighted to be chairing this panel and to have such an array of distinguished guests here to talk about this really critical topic of culture in financial services. We really are blessed to have such a wealth of perspectives from across the financial sector represented here on the panel, both in terms of the sectors that they represent, but also in terms of their roles, as I introduce people in a moment. So really looking forward to a really lively and thought-provoking discussion on this really important topic. We've kind of been talking about culture all morning, of course, and even when we're not talking about culture, we're actually really talking about culture. So I suppose our challenge, and I felt it myself as a chair as well, is, I guess, to try to distill a little of what we've been talking about today into a focused discussion about the importance of culture in financial services, the current landscape that we're facing, and the future priorities. And there, I guess, we will talk a little bit about what we mean by good culture, as Verena has been speaking to, the role of regulation in culture, and we heard a little from Martin earlier on that, the value of information and education, and so forth. As Gina has said, and many of you will know, fostering a good culture in financial services, it has been and is a key priority for the Central Bank of Ireland, as it is for others here in this room. So I'm personally really interested in hearing what our panellists have to say on this topic. I was really interested to hear Verena's point about our role as a supervisor, and I might ask you a question about that in a moment, because as a supervisor and as a regulator, we of course see on a daily basis, we see good culture matter. We see a good culture within a firm lead to a better outcome for the users of financial services and the system at large, even in some quite difficult and challenging situations. And correspondingly, we see where the absence or deficiencies in that culture lead to very different outcomes, aggravating risks, and indeed leading to outcomes that are harmful for consumers and harmful for our society at large. So I suppose when we look at the theme of our overall conference today and tomorrow, supporting the economy and delivering for the consumer, I think we have a panel now who are exceptionally well placed to help bring us along in this discussion. So it's with great pleasure that I welcome, as Gina has said, Verena Ross, Chair of the European Securities and Markets Authority, Moyagh Murdock, to her left there, from the CEO of Insurance Ireland, MaryRose McGovern from the Financial Services and Pensions Ombudsman, where she's acting Ombudsman, Mr. Justice John Hedigan from the Irish Banking Culture Board, Dr. Agustín Reyna, who is Director of Economic and Legal Affairs at the Bureau Européen, the Union, the Consommateurs, and of course John O'Connell from the Financial Services Union. So you're all very, very welcome. As with the other panels, we will take some questions from the floor, but first, and virtually, but first I wanted just to turn to the panel and maybe just get some insights from each of them. And maybe starting with you, Verena, as you just so kindly spoke to us and said those words to us. I was particularly interested in your point about the different actors in the system. They have different roles to play. I guess different risk appetites, so it's not just one culture we're trying to foster here. And we are in a period, as we've heard over the course of today, of a lot of change going on in financial services. So in your experience as a supervisor, are there any particular principles that you've observed in firms, or particular areas of focus that you thought that makes a very big difference in a firm, bearing in mind how sort of multifaceted this sort of topic is?
I think you say it's very multifaceted, so I think it's very hard to put a kind of framework or a kind of straitjacket around it. But I think what we can see is that honesty and integrity is very much at the bottom of a lot of this, I think, together with good corporate culture and good decision-making in a transparent and open way. And I think for me that is really exemplified wherever you look across the financial services sector. And in a way, ESMA is a good example of that, because we are so broad-ranging, and we are not just supervising banks or insurance companies. It's really very broad. And so we need to really look back to what are the underlying tenets of good culture that we want to see, which also hold true not just in traditional financial services, but also in the new world that we are facing now. And I think there, if I look maybe at some of the recent crises and issues that we had to deal with, just looking, for example, at commodity markets, something that is not the core of most of what we are dealing with as financial regulators. But when it actually has impact on the average person in Europe, how much is my gas going to cost me? How expensive is it to fill up my car? Do I have food on the table? That is something which is clear, that even in those type of markets, which are financial markets on the derivative side, we need to foster proper and ethical behavior.
Thank you, Verena. Thank you. I'll give you a break there. First, you've been doing all of the talking for us for a while. Moyagh, Verena mentioned there, the point about looking across sectors. And you, of course, took up your leadership role in Insurance Ireland from a very different sector. One we actually spoke about earlier today when Niamh was talking about, I think it was about the airbags and so forth, because you came from the area of road safety. So you must have some interesting reflections having moved, and I know you have a past in financial services, but having moved from something like road safety into financial services with Insurance Ireland, you must have some interesting observations on the culture that you've seen and where you think we should be focusing.
Yes, indeed, Colm. And as you say, I have come from probably gamekeeper to poacher, coming from the Road Safety Authority, which was the regulator for vehicle standards and commercial vehicle compliance. So it was a big decision to make, I must admit. I had dealt with the industry through the work of the Road Safety Authority and obviously trying to drive down the number of deaths on Irish roads. But I saw it as a good opportunity to bring a lot of those learnings to the job, and even coming in as a consumer. We all had our perceptions, and the insurance sector really has gone through a challenging few years. So as some people would say, never let a good crisis go to waste. It was an opportunity to maybe bring something to the party. So as you say, on top of that, I started just as the COVID outbreak hit, and we went in straight away to lockdown. So it's been a real steep learning curve, and I have to say the board of Insurance Ireland really they recognised they were going through a very challenging time, and they wanted to do something that would try and address the perception and the reputation that the industry was acquiring and had acquired. So they took a big leap of faith in appointing somebody from outside of the industry, completely not an insider, but demonstrated, I do believe, that their own willingness to embrace change and address cultural issues that have led to being a problem for the insurance sector. So it's certainly been a very enjoyable experience. We have had a tough couple of years, and you can see, as an outsider coming in, some of the problems that the lack of diversity and inclusion do bring to a sector. And I'm sure Judge Hedigan will talk about the need for cultural audits and reviews to see what is driving that culture. Because, if you're looking at an organisation, or if you're looking at an industry through the same eyes that have been there for 20, 30 years, it is very difficult to break out of that mould. You do sometimes need to really, go for transformational change. And I think this is a good opportunity, and the insurance members of Insurance Ireland really are committed to that, addressing the reputational damage and addressing the perceptions that the public and the regulators and the legislators may have of the industry, and they want to do something about it and try and do it with meaningful actions and outputs, not just a box-ticking exercise. So I think that was a very positive journey to be on, and certainly we've talked about the regulations that are needed to change culture and to protect the consumer and to ensure good outcomes for the customers. But and the industry do welcome the whole SEER regulations and the individual accountability regime, and do believe anything that brings protection and to raise reputation of the industry and to protect consumers is to be welcomed. But we also need to be really careful not to throw the baby out with the bathwater, as they say, and get the balance right, because we want to attract diversity into the industry. We want to attract the right people in to drive through that change. And I'll be upfront. I think we would have concerns that maybe it's not completely aligned to the desire to improve on the cultural, the diversity targets that we want to meet, because it may detract people from coming into the industry. The actual rules may mean that we're excluding certain sectors, certain cohorts, in particular women, may be more adversely impacted by the new regime. So that will work against the change that is setting out to deliver. So I think it's important to get the balance right and to make sure that it complements the existing targets in other areas in terms of diversity and inclusion, because they have to work together to change the culture that way, as well as having safeguards in place. It is very important that the balance is right there.
Yeah, thank you, Moyagh. And look, a very compelling argument there for diversity across a range of fronts, and an interesting link back to what Minister Donoghue said earlier in the day about getting that balance between regulation and also getting people into the industry, etc. So
just to finish on it too, I think the Governor himself did speak about looking forward to the pathway to a good culture. And I would actually reiterate that myself. I would say it's really important to look forward even in potential. And part of the challenge that we have to overcome is maybe there's too many restrictions placed on who is deemed to be a suitable candidate for a senior position, for a board position, because we're too focused on looking back and looking at the credentials and the experience and all of the qualifications that they have, as opposed to looking at the potential that somebody from outside of that sector will bring to the role and bring that diverse voice to a board, it's, you know, you do need somebody to ask the stupid question at a board as well. And you won't get it when you have everybody sort of looking through it at the one lens. Bring in the non-expert voice as well, who's just looking at it in black and white, you know, the simple view. And sometimes, what does they say? KISS regime, keep it simple, stupid, you know.
Yes, exactly, and look, really thought-provoking and a challenge to there, I guess, of our traditional thinking about some of those things. And you mentioned, of course, good outcomes. And turn, MaryRose, you're in the role that you occupy in the Ombudsman's office, obviously at what one might say sort of the front line of seeing some of how this plays out in the outcomes for consumers, as I think others have been saying over the course of the day. None of this exists for its own sake. It exists for those outcomes. In your experience, what are you seeing in terms of maybe, I guess you've seen cases where, you know, you haven't necessarily seen the culture that one would expect to see in the industry, but maybe also seen some cases where maybe firms took the opportunity of a mistake or something having gone wrong to learn from it and do better?
Certainly. But before I get into case studies, maybe I could just say something about culture from the point of view of my organisation, because in taking on the role of investigating complaints against financial service providers, I'm really conscious that holding other people to account, we have to hold ourselves to a very high standard. So culture is something that we take very seriously at the FSPO, and we try to drive that idea of living the values of the organisation and infusing those into day-to-day activity. And for that reason, about 2 years ago, I introduced ethics training specifically for staff. And it's not part of induction, it's part of when you're settling into your role. And it's to give you an idea of, well, you know, how do I go about this role in a way that I'm really interested to hear those words, honesty and integrity, because I think that's central to the culture of any organisation. But ethics training is for people who are at that kind of 3-month, 4-month period in the FSPO. And it asks staff to engage with some really significant dilemmas, because it's easy to talk about culture and about doing the right thing. What is doing the right thing? But when faced with the reality of a really tricky situation, will you actually do the right thing? And will you use the values of the organisation to drive you in the direction of doing the right thing? So just to talk about a couple of case studies, and you'll know this, Colm, because I've referred 2 decisions to you recently which kind of point towards that cultural piece. And the first one concerned a couple who were moving house, and they went to their bank and they were looking for a mortgage mover product, and they were told that they needed a deposit of 10%, and then about 6 weeks later they found out, well, actually no, it's going to be 20% you're going to need, and that was very tricky for them. But that's all very well. These things happen. It was a mistake. But the significant part of what happened then is how the staff member in the organisation dealt with that. So instead of putting a hand up and saying, I've made a mistake here, let's try and manage the situation and do the best for this customer, the mortgage advisor took it upon herself to change the details on the application form which had been signed, and even went as far as to tick a box to say that product information had been received, when in fact there was no evidence that the product information had been received. And I hope you're sitting there aghast, and I hope you'd love to be telling yourself that never going to happen in my organisation. But I think we're all in that space, but for the grace of God go I, because culture is something that you have to keep driving. And I would really challenge you to ask yourself there, well, why did that employee feel perhaps unsupported, or feel that it was the best thing to do to change that application form? Why did they not feel comfortable in putting their hand up and saying, I've actually made a mistake here? And just to touch very briefly on another case study where very confidential information about a property that was coming up for sale, which was not public information, was released by somebody operating within the unit that was aware of what was happening with that distressed loan, and then was compounded by another person in the same unit, both of whom went to their pal who they knew would be interested in that distressed property. So again, I don't believe there was any understanding of why you wouldn't do that, and no understanding as to how that confidentiality piece feeds into day-to-day activity. So, you know, I would challenge you today to think about the culture in your own organisation and think, well, could that happen? Is there a clear understanding? Am I supporting staff adequately to make the right decisions when something goes wrong? And I know we'll probably have an open discussion, but just picking up on a couple of the items that were mentioned. You know, we talked about ESG and this drive to ESG. So pulling away from those micro decisions and little individual stories of customers, pulling away to a sort of a more macro environment. You know, we talk about ESG, that drive for environmentally sound products. But at the same time, we want to regulate crypto assets, and cryptos are so bad for the environment. So culturally, how are we aligning those two things, and what is the right thing to do? And, you know, I'm reminded of, is it Sebastian in Brideshead Revisited who says, "Oh God, make me good, but not now." You know, although I think he might have borrowed that from a saint. But it is that idea that culturally, are we doing the right thing now? Or are we keep going to talk about maybe, you know, working towards something? Another phrase that Verena used there was monitoring the pay gap. Are we okay with that, to monitor it? Should we be eliminating it? You know, culturally, we should be asking ourselves, it's now, it's not tomorrow. Culturally, we have to make the right decisions now.
Very good, yeah, and so really sort of a really interesting perspective there in terms of it is about the actions we take, right? It's about the actions we take on a day-to-day basis and not just things that we say. And some very, very basic sort of terms there like ethics and honesty and integrity. And another one, of course, we've heard of the course of the day is trust. And so if I turn to you, John, I was very, very interested to see on the website of the Irish Banking and Culture Board, front and centre is a statement about rebuilding public trust. So really interested in your own perspective from the role that you're in on a board that is dedicated to this topic and specifically within the ecosystem to tackle this. So going to all the complexities we've been talking about, you know, how have you been coming at that, and where do you think we are, for example, as we head into the individual accountability regime and so forth?
Well, first of all, thank you very much to the Central Bank for inviting the Irish Banking Culture Board to be here today. I'm here with my CEO, Marion Kelly, and we're delighted to be here. When I sat down to make up some notes for myself for today's session, the big challenge was what to leave out. There's so much that is going on at the moment with the Irish Banking Culture Board, which is now in its 4th year. It's hard to believe that, but there it is. All I can say is I'm sure I'll only be able to touch on things that we have been doing. But I invite anyone to have a look at our website. I can claim no credit for it. I'm not much of a tech savvy person. Marion and her team put together what I think is a terrific website, and it's full of interesting information about all sorts of things that the Banking Culture Board has been up to. So I could put a safety net onto myself at the beginning by saying, have a look at the website if you get a chance. We came into existence as a result of the tracker mortgage scandal, which was the last straw. And in 2018, the central bank produced a report helped by the Dutch authorities, which really was pretty damning. And it was at that stage that it was decided to have a banking culture board established. Marion, in fact, was seconded to be the chief development officer, leading a team. They set about immediately doing a survey of the Irish public, and they identified 52 stakeholders, believe it or not. That resulted in 38 interviews. They then had the British Banking Standards Board do a survey of the staff. They're very good at that sort of thing. They did that, and then they set about choosing a chair. I came in at that stage as an applicant. I was hugely impressed by the fact that the banks had entirely outsourced the picking of the chair to a London firm of executive recruitment people, and ultimately a selection committee chaired by Dame Colette Bowe, the chair of the British Banking Standards Board. So I finally wound up in this position, and I was then given a completely free hand in picking the board. And I did so with the assistance of Marion Kelly, and basing ourselves on the experience we'd had of the survey of all the stakeholders. So independence from the very start was the absolutely key feature of the Irish Banking Culture Board. And if we can't offer independence to both the banks and to the customers and to society in charge, then we have nothing to offer at all. So independence is very important from our point of view. The board that I picked was, as best I could, to make it representative of all the stakeholders in Irish society, and also to have a majority, 7-5, over the banks. From the bankers' point of view, I wanted people who were at the very top or close to it, who would be there, so that we could interact with each other, so that these groups, who would never have been in the same room before in their careers, would be able to talk to each other and ascertain just what the problems in banking actually are. One of the very most important things that, from the very start, that we emphasised was we were not interested in producing worthy reports that would gather dust on somebody's shelves somewhere. We want to do things. We are serious people who mean business, and we want to see improvements, and we want to focus on real improvement. Thus, we adopted a very structured approach to how we would go about our work. The modus operandi that we adopted was, first of all, based on the surveys that we had already done, and we've done more of them since, to determine what the real problems are, asking the people out there, what's wrong, what is going wrong here, and sometimes what's going right as well. And then also inquiring from the staff, what do you think is going wrong and what's going right? And from that, we worked out our work programme, which divided itself into 9 work themes, which have morphed into 8, and 3 pillars. The pillars are external, that's the customers, the general public. The second is internal, that is the staff, the problems that they face. And the third is the role of the bank in the community. So I can't go into much more detail in the short time that we have available here today. All I would like to do is to give you a few examples of what this has actually resulted in. The first of these was the very first problem that we came across, and that was that there are 50,000 bereavements that are dealt with every year by the banks. There are 30,000 deaths a year on average in Ireland. That results because more people have more than one bank account, and also it overlaps from year to year. There are 50,000 bereavements that are dealt with every year. All of those customers are people who are in a very, very difficult emotional situation. They're in big trouble. And at this critical time of their lives, they have a lot of problems with their financial arrangements. As we looked across the whole range of the banks, they were all doing a lot of very good things, but there was no coordination, and some were doing better than others and doing things differently from others. So we brought them all together, all the banks, the people who dealt with bereaved customers, and we also brought in some experts in that area and our own people, and we sat around and figured out what are the problems, what can be done. And as a result of that, we produced, really the first thing that we produced was the common commitment of care for bereaved customers. And that, I think, has resulted, we've monitored that since that first came out, and that has resulted in a very satisfactory level of service to the public at their most difficult time in life. And that seems to have worked very well. The second example I'll give you arose from what was discussed this morning, and that is the basic bank account. As was pointed out by Brian Hayes, EU law provides that every citizen of the EU is entitled to a bank account. Now, obviously, this creates difficulties for lots of people. When we focused on this, we looked at refugees, asylum seekers, prisoners, people who just are financially illiterate in effect, and those who are sometimes in domestically difficult situations where they have no financial independence. So we talked with the banks. The basic banking account does exist all around, but was not very much used. So we have encouraged the banks to try to encourage people to take this up. As a result of that, we produced the guide to the basic bank account, and that was published this year. That's a very interesting thing to look at on our site, by the way. Yesterday, before coming here preparing for this, I looked up the site and I saw these. The guide to the basic bank account is currently in 10 languages, the most recent being in Ukraine. I looked just for kicks at the one in Urdu, and I can advise anyone to have a look at it. It is incredibly beautiful. The writing is such lovely, elegant writing. Of course, I couldn't understand a word of it, but nonetheless, it was interesting to look at. So if you want to improve your Urdu, have a look at our site and check that up. The next example I'd give you is in relation to the Individual Accountability Framework, stroke SEAR, which has been referred to here this morning, which is going to be exercising the minds and hearts of everyone for the next couple of years, I think. In this regard, we again adopted a workshop approach to this. The Deputy Chair of the Irish Banking Culture Board, Professor Blonett Clark, who's one of the world's most renowned academics in this area, orchestrated a workshop involving contributions. This is by Zoom from the UK, from Australia, from the Netherlands, that involved submissions from Singapore and so on, to study what has happened in other countries, in other jurisdictions where a similar regime has been brought into effect. And it was very, very interesting, and we held another one involving Irish bankers here 6 months later. This was in 2021. And the overwhelming information that we got back from this tour d'horizon of the whole globe was that it's not as scary as it seems, that a lot of companies who felt that this could be a really terrifying and dangerous thing have actually found that it's quite constructive. It has worked reasonably well. It would appear that the absolute key to success, and this was universally the case, is close engagement between the regulated entities and the regulator. If that does not exist, the scheme will fail. It cannot succeed, and it will not succeed. That's a big challenge for everyone in Ireland, because the banks and the regulator have been thrown into a confrontational situation over the tracker mortgage scandal. Is it any surprise? That is only just concluding. So for the future, that is going to be a real challenge for both elements involved here. That is to manage to engage together closely and cooperatively. That is the key loud message that came to us from that global intervention or consultation that we had. We will be having another workshop meeting on this in the near future to consider this vitally important aspect of things. The next most recent example I can give you is on one of our most recent surveys. We determined that the farming community has extraordinarily low levels of trust in the banking sector. That's very serious, because they absolutely depend upon it for the kind of industry that they are in. They are all SMEs in effect, one way or the other. Again, adopting a workshop approach to this, we brought together the top people from the agri sections of the banks with the top people from the IFA. Martin Stapleton, who's one of the head people in the IFA, is on our board. We met down at the ploughing championships of all places, and we had a most interesting morning of discussion in which we thrashed out loads of the problems that existed, where the farmers are able to say what their problems are, and the bankers are able to explain certain aspects of the problems they have in dealing with the farming community. Apropos something that was mentioned this morning, one of the farmers referred to the fact that they have to fill out a questionnaire of 40 pages long in certain circumstances. But that is the ultimate, blockade to any dealing at all. So that's something that has to be dealt with, and that I think will be. We've been involved in the Speaking Up project in all of the banks from the very beginning. We regard that as one of the key items in the work of the Banking Culture Board. If we can ensure that within the banks there is the development of an environment in which people feel safe to speak up, that will be of enormous assistance in the future. And I'm happy to tell you that the most recent surveys that we've had of the banking staff indicate that there is a huge increase in the sense of safety in speaking up. And so that's a very significant matter. I don't want to be too long because I don't want to hog the airways, but just to finish with two different things. We also drafted last year the guiding principles for change. We got the 5 banks to, after considerable work on the part of Marion and her team, to agree these guiding principles for change, and all 5 boards of the retail banks agreed these. This is how to deal with change, keep the customer informed, bring them along, help them, support staff, and so on. Then when we had the real tipping point came this year for the departure of KBC and Ulster Bank. In collaboration with the BPFI, we developed principles for change in terms of switching accounts. What should be done, what shouldn't be done, all the help that should be given. So we've come a long way in the 3.5 years that we've been in existence. Our most recent production is the statement which we promised from the very beginning in relation to the tracker mortgage problem, scandal that have arisen. We waited until the very end, until the Bank of Ireland's fine was finally imposed and things were decided in that regard. And then we issued what we consider to be a considered statement, a reflective statement on what's to be learned from all this, and all aimed at the most important thing of all, which is that such a situation should never arise again. So I'm sorry I've gone on a little bit longer than intended.
Well, no, thank you,
hard to know where to stop, Colm.
Thank you. And again, look, it's really great to see the sort of action-orientated approach. I think that's coming through very strongly from the themes of the panel. I'm also to show that this panel can actually take action as well, because I already have some questions in, and one of them, Agustín, is a question I was thinking to ask you, which is, of course, you bring a very interesting perspective to this panel, coming as you do from an organisation that looks at the consumer experience across sectors, not just in financial services. So the question here, virtually, are there lessons that the financial services sector can take from other sectors in the economy in fostering a good culture? I know you wanted to talk a little bit about empowering consumers as well, which is something that Verena, you mentioned in your remarks.
Yeah, absolutely. Thank you very much, first of all, for this extremely interesting conference where consumer protection is at the core. Not to say that having participated in a conference in the Avive Stadium as a rugby fan is quite something. I told my dad he didn't want to believe me, so I had to send a picture. So indeed, we hear very, very often that we need to empower consumers to make informed decisions. So these are two concepts that come together very often, and it's not only in financial services but also across sectors. You know, we give information to consumers, and then we trust that they're going to make the best decisions for themselves. But when it comes to finance and financial services, we are confronted, or consumers are confronted with extremely complex products, which are characterized on one side by highly professionalized industries, and on the other side by uncertainty. Uncertainty is a key factor because of asset volatility, life events, financial instability and inflation, trade-off between short-term and long-term benefits, so on and so forth. So, of course, no matter how much information we want to give to consumers, they need to rely on expert advice at the end of the day. However, what we have been identifying, from the consumers' organization point of view, is that financial advice in Europe is failing consumers partly because of the conflict of interest that are at heart of financial advice. So the whole system is basically built on providing the wrong incentives to the markets, because consumers are recommended purely performing products, which are the ones that, coincidentally or not, provide the highest commissions. And already for a couple of years, we have been running a campaign called the Price of Bad Advice, which basically compiles mis-selling scandals. Basically, people have lost a lot of money, or significant amounts of money, because of ill advice. And of course, this goes even beyond, the financial losses, because when someone loses their life savings, that have consequences for your health and the well-being of your loved ones. And I invite you also to look at our website, because there you can see actually the people telling their stories, and their own experiences directly. But of course, this is just the tip of the iceberg, because the wide majority of consumers might not even be aware that they could have chosen for a better performing product at the end of the day. And there is a study of DG FISMA, the European Commission, exactly on this. And this study had indicated, and I read the exact extract, when inducements are presented, they are associated with higher product costs for consumers. And when inducement values were clearly made, it appears that the value of inducement was significant. On average, for the products in the sample, inducement are equivalent about 40% of the total cost charged to the retail investor. I'm also happy to be sharing the panel with ESMA, because you have also done your own research and your own studies, and one of the key takeaways is basically that retail products are more expensive than those offered to professional parties and underperform. So, in other words, basically, companies are better off than people at the end of the day, the retail investors. So we need to acknowledge that consumer information and disclosure has reached its limits. And if you see the amount of disclosure that financial entities are required to provide, it's massive. And how we try to solve this problem of conflict of interest with more information. And then what is the solution? Okay, now because it's so much paper that we need to give to people, let's digitalize everything. So this is not going to solve anything at all. So we really need to address the question of conflict of interest, and we are very much looking forward to the retail investment strategy that's going to come up in early next year that hopefully will address this issue as well. But coming back also to your question, one of the interesting things of my organization is that we really look across sectors, and we have what we call an out-of-silo approach. So we try to learn, from different industries. And of course, after the financial crisis, the European financial sector became an example of regulatory convergence at the end of the day. With its limitation, of course, we still have a board of 27 national authorities, which presents its own challenges. But of course, it's a model of centralization that was unimaginable in the early 2000s or even before. So of course, we can be proud of the progress that had been already made. But an area where there had not been sufficient developments in financial markets related to consumer protection beyond information disclosure and education. And here we can identify some missed opportunities compared to other sectors where, for example, consumer redress and enforcement had made a priority. So, for example, there have been tools developed around alternative dispute resolution, ODR, small claim procedures, representative actions, so on and so forth. And we need to have a conversation about how all these tools or these mechanisms can be applied, can be better used in financial services. And for example, the German Federal Supreme Court, the German Federal Court of Justice ruled that the MiFID II provisions on acting in the best interest of the clients cannot be used by an individual investor, because it's considered to be supervisory law at the end of the day. So it's for supervisory authorities. So we are seeing that there are barriers for actually people exercising their rights. Even we can have a discussion about what does it mean acting in the best interest of the in the best interest of the clients of the client. So here I do see that there is much more scope for work in relation to giving access to redress where things go wrong. But even before going that, we really need to solve the problems that we identify in these markets, which are structural. And it's great to have education, and was a panel previously on this, and I think that financial education should be part of every single school curricula, should be available to people, but we cannot underestimate the limits of education and the limits of disclosure.
Thank you, Agustín. And I'm glad to hear you mentioned inducements, because I know my own team are tired of me telling them, if you follow the inducements, you find the behaviour, because it's such an important feature of it, and that need for structural change. John, finally, just before we go to maybe some more questions from the floor and online, I think the Minister, I didn't make a note of it, but he said something in the region was that 56,000 people working in the financial services industry. Not all members of your union, perhaps you wish they were, but you have an insight for us into that lived experience of people on the ground, as it were. We've had the cases that MaryRose mentioned about, asking those questions about why might a person feel they can't speak up? What sort of issues do you see going on in the financial services industry in relation to culture that you think we should be particularly focused on?
Yeah, first maybe to say I'm an optimistic contrarian. That's how I view my role in terms of, and sometimes that's misinterpreted in terms of when we call stuff out, why are you doing that, and you're bashing employers and so forth. And that's not the reason we do it. We do it because oxygen is necessary for cultural change. Things have to be seen and held up to the light in order for cultural change to come about. The people I represent, the people who serve us daily in the banks, they're customer-centric. If you want a definition, go and talk to them. They are customer-centric in everything they do. They don't like modern arrangements where they're told, don't serve the customer, because that's what their culture is. It's brought up to serve the customer and provide to the customer. They don't like a situation where they're told, Colm, there's a machine over there, go make your lodgement there, I can't accept it. They don't like that. So in terms of understanding where they are today, I think you've got to understand they were the people, they're not doctors, they're not nurses, but got up and went to work every day. When a lot of us had the luxury of looking into a computer screen safely, a lot of them got infected with the virus when there wasn't vaccinations in place. And I think it's important to remember that these are the people that got up and did that every day, like lots of other people whose roles are revalued in the new world in terms of it. And they came out of that and went straight into switching. So the announcement was made and straight into switching. And if that wasn't bad enough, just to add to the mix, they had thousands of redundancies in the mix in that time. One that was announced during the day when people were trying to get their kids back to school for the first time. So in terms of that's where they are at, and that's their understanding. And notwithstanding that, they're still today, you know, belting it out of the park in terms of the numbers of new accounts being opened on a daily basis, working Saturdays, and anything else that's asked of them in terms of it. But I think in saying that, we have to acknowledge where good things happen, and COVID also produced good things in terms of how banks responded to communities, to SMEs, to individuals in terms of the breaks that were apportioned to people and how that came about and the way it was worked through. There was a real maturity there. But again, we feel you can't switch on and off good culture. You're either for it, with all the ups and downs that go with it, or you know, don't tell me I'm going to operate to a good culture and try and switch it on and switch it off. So, in the relatively recent past, the ink isn't dry on your reports on the tracker mortgages, and we've seen, I suppose, decisions made in terms of cashless and access to cash and so forth that resulted in, you know, a community upswell across the country in terms of people just had enough. This isn't what they wanted, and they reacted to that. So I think we're on a journey. I think we've got to understand we're probably on a 10-year journey in terms of culture change in the finance sector. If you read those same reports, Colm, that you and your colleagues wrote, you'll understand how embedded and ingrained the culture is in the banks for those tracker issues to occur. And we can move on, and we should move on. But we have to understand the depth of the challenge to us to change cultures that are so embedded as you read out those reports. Equally, from yourselves, you identified poor service, 50% drop rates in calls, 2-hour waits for people. Again, signals that not everything is right. We're on a journey. We're not quite there yet, and we mightn't even be halfway. But there's I suppose, positives on the horizon. One of them the Minister referenced today, and that's the report on the future of banking. We can determine what type of banking we want for our society, for our SMEs, for our individuals. We can determine that. And that has been, I suppose, groundbreaking in terms of going out. We were the first, or one of the first, to call for a debate on the future of banking, and us determine, through input, through public consultation, what type of future we wanted in our banking system, and to address some of those things that clearly we got wrong as we go on this journey. The definition usually used for culture is the way we do things around here. The more, I suppose, advanced one is the way we do things around here when nobody is looking. And I think that's the one that we should keep in our head as we go on this journey. There is a positive future here. We're going to have a different banking landscape. competition and other issues that are going to come into play that never came into play before, and they're going to have to be developed. Sears is going to come into play. I do think there's, you know, a lot to be said in terms of Sears, but I don't think we should put all our money on one horse. And I think there's a challenge to us to look beyond Sears. It's not going to solve anything or everything. It will solve some things in terms of what we'd like to achieve. And just to pick up finally on the point, when you look in terms of the regulator produced papers in relation to gender balance and what's required and so forth, and you can see the good actors. Just look on their websites and look on their boards. Really good actors, management teams and so forth, particularly around gender balance, maybe diversity and inclusion broader, we're still on that journey. But there's also other actors who seem to have not heeded the call in terms of what that can bring to an organisation. And that's really where good culture starts. It's at the board level by having diverse views and having inputs from everybody. And that's, I suppose, the final point I'd make is the paper we produced as part of our submission to the future banking is around stakeholder banking. We've had years of shareholder banking. And stakeholder banking is a model well tried and tested. Credit unions are stakeholders. They operate in that model. We believe that a lot of the decisions that I referenced there may not have occurred were there a broader representation at board level in organisations. Financial Conduct Authority identifies worker directors as being important. We'd concur with that, but we'd also extend it to consumers and getting their voice heard at the highest level. So I'll finish on that and just summary of
Thank you. Look, I think some really strong themes there around diversity and inclusion, and a very, I have to say, very coming across the whole panel, and a very encouraging thought that perhaps this is something we can shape. We can shape the culture together on this. And I want to see if there's anyone in the audience who wanted to ask the panel a question. Yes, we have a gentleman here. And as before, once you get the mic, perhaps you could just introduce yourself and ask your question.
So, hi all, I'm Archis from Citibank. So thanks all the esteemed panelists for all their great insights and stuff. So for me, like I'm just trying to give like a contrast. I worked for Google before going for, like working in a major Wall Street bank. So I used to have, like when I was in college, like to have like a startup ecosystem culture, like everything should be horizontal. I should be approaching, like all the people ecosystem in terms of trying to get that thing. So I try to kind of get that same culture even in like my financial services, like industry, to make like that open door policy, give people empowerment to, like speak their mind. And I myself take criticism very positively, but I always kind of, like make that approach, like everybody come from a problem solving criticism. So we all talk about problems, but how we can solve that particular problem, that's also kind of something very important I want to kind of see. And like the question I'm coming from is like, I end up having like a very diverse team from Shanghai to New York. So we all talk about EQ and IQ. I cannot comment on my IQ at this moment because I still learn every day. I still consider myself a student. So like being a very empathetic person, when you have like, like all these subject matter expertise, giving your opinion about, like something, what can be the best solution for a problem. I find it like, like being very data driven as well, but you have to take a decision at the end, like take a call, like how you're gonna make that particular thing work around. So I would like to ask the panelists, like how that particular decision making can be kind of, like working well in terms of an inclusive environment as well, because I still try to kind of keep it very horizontal, even if you're like working as a cleaner or a coffee boy in my bank, or you are a CEO, my personality will be the same. So that, like I try to kind of, like speak from my actions rather than, like as a leadership principle, I still believe myself, like leadership is not about selling fairy tales. It's all about, like you confront challenges and, like deliver on your values. So
thank you. So a question there, and I'll maybe see if there's any others and then just come back to the panel and then wrap up. We probably just time for you to respond to the questions, and that will be our final remarks. So down at the end there, yep. Just take one more question.
How are you doing? Michael Kavanagh, Chief Executive of the Compliance Institute, which is the membership body for compliance professionals in Ireland. And prior to that, I was CEO of the Irish Auditing and Accounting Supervisory Authority. And Verena, I chaired a number of ESMA working groups with your predecessor, Steve Moyagh. And it's in that context, some of the feedback I'm getting from the compliance officer, which is obviously in the cold face of regulation, is clearly, and from my previous job as a regulator, Bad behaviour is disincentivized. There's fines and there's publicity and all of that, and that's right and that's good and that's the way it should be. But the question arises sometimes, should good culture be incentivized? If you go in and do a review as a regulator or whatever, and you see something good, should you be reporting that more proactively as an incentive?
Thank
The
you.
panel has any view?
Thank you very much, Michael. And I know we're very tight for time, so I might just maybe throw that open to the panel. Two questions there. One on inclusive decision making, if I've got that right, and some of those other points. And that point, which I think is often said about how, as regulators, do we promote good culture as well as calling out the bad. Moyagh, yeah.
Yeah, I might take the question on should good culture be rewarded, and I suppose not unlinked to this here is the position that Insurance Ireland believes is that obviously we have the CPD points for the technical courses, the taxation, the compliance. However, I do honestly think we dilute the value of things like diversity and inclusion and sustainability by not encouraging more individuals within organisations to get on the training programmes and do them. Let's be honest, human nature, what's in it for me? These are the things, the ethics courses, the inclusion courses that are getting neglected because there ain't anything in it for me a lot of the time. So I think that's something, if it's not so much a financial reward, but it is an encouragement to really get on board, and the culture will change. Look, whether they like it or not, people will absorb the messaging and the learning. And as you say, when we have diverse management and diverse decision making in organisations, whether they be at senior management or in boards, the organisation performs, I think it's something like 41% better financially, and they also have a much lower reputational and governance risk. So the organisation is paying for itself by having, you know, the balance there. And I would agree as well with MaryRose's point on should we be monitoring the gender pay gap. We should be doing more about it and encouraging more women into the industry and rewarding them, and that in itself will pay for itself as well in the long run.
Thank you very much. Verena, we started with you as a speaker. If you don't mind, maybe I'll press you for one final comment maybe on what you've heard, and maybe even as the chair of a board, that point about inclusive decision making.
Yeah, I think inclusive decision making is extremely important, and I think others here were talking about, you know, it's the stupid question which might be actually the question to ask to really get to the bottom. I think in financial services in particular, we have a tendency to talk in acronyms, to make it more and more complex, and that is nearly seen as a benefit in itself. The more complex it is, the better it must be, and I think we need to really rethink all of that, both for the professionals in the industry, for the investors at the end of the day, and for those who are taking the decisions. Because if we want more inclusive decision making, we also need to enable the decision makers to really understand what they are taking a decision on. Part of that is data, part of that is openness to question and challenge. And I fully agree as well that we should be also promoting good examples, and we try to do that sometimes, but we probably don't do it often enough. So I think a good reminder.
Very good.
I recollect on one occasion a number of years ago, my former boss, the president of the Court of Human Rights, Lucy Philtower, was over in Ireland speaking to students in King's Inns. And at the end, he took questions, and one young lady put her hand up rather tentatively and said, "This is probably a stupid question." And Philtower, who was probably the world's leading academic, said, "In my opinion, there is no such thing as a stupid question. There are only stupid answers. So you just ask your question, and I'll try not to give you a stupid answer."
Very good, very good.
I think that's worth bearing in mind.
Indeed. And we just, Agustín, I saw you just wanted to come in there, maybe just in 60 seconds before we wrap up, yeah?
Yeah, just very, very briefly, I totally agree. You know, making things complicated doesn't make them better. Sometimes quite the contrary. And just to share a very, simple example, in our organization, so we are a consumer organization, so we need to talk to the decision makers, to the European supervisory authorities, to the national authorities, but also to the people back in the countries. And one of the things that we decided to do is that every time that we have a public communication of something, we need to explain why this matters to consumers. We need to make things simple. And one, for example, of the task of the authorities is simplicity. We need to try to develop as simple products as possible for people to understand the benefits of engaging with these markets. If we see that people do not behave in the way we expect them to behave in this market, it's because there is a problem in the law themselves and the way the law is also interpreted and applied. So we need to really fix it at that level in order to be able to steer the markets and steer people to bring the desirable outcomes that this legislation was designed in the first place.
Thank you, Agustín.
Just on a final word of incentivization, obviously working in the public service, there's no monetary incentivization, but I think the critical issue and the critical message is to incentivize good behavior and incentivize doing the right thing. And I was reminded there when you were talking about somebody who came to me about 2 years ago and opened the conversation by saying, I think I've made a mistake. And I cannot, hand on heart, say that the first thing that I said was, thank you for telling me. But it was certainly maybe the third or fourth thing that I said after I picked my jaw up from the floor, because it was a very big thing. But the incentivization that I would see around that is that that person left the room and the rest of the team discovered that there was no execution at dawn, that it was about finding a remedy, trying to identify how that issue could be dealt with as soon as possible with the least impact on the people who were involved. So, you know, this is not easy. Honesty and integrity are not easy words. They're small little words, but they are difficult to live. But that, I see that incentivization as part of living those values of the organisation as you go about delivering on a day-to-day basis.
And I think there's probably a lesson in there for us as regulators as well in terms of our demeanour when firms come to us to engage with us on issues. And I'm going to, they also say culture is about tone from the top, so I'm going to try and wrap it there so that we finish on time, because I know that I'm standing between you guys and coffee. And in terms of positive rewards, I think the panel, you have certainly earned it. You as an audience have earned it. Thank you very much for your attention, and thank you very much our panellists. Thank you.